Good evening, Gene Inger. This is a Thursday final. We've had quite a swing this evening, and I think I have an idea why. And as a matter of fact, the S&P futures were down like 20 handles. Now they're down. They're up 6 handles from where they settled at 415. And you can see this as we washed out and came back up after the close. Here's your close of the market, and I just want to point that out. Let's go to the daily basis chart right away that we normally watch. There's actually been as much action this evening as there has been during the day. I think there's a couple reasons. The superficial reasons that you'll hear about will be that we may be living with the coronavirus pandemic well into 2021 because most quote-unquote experts believe a vaccine won't be ready until next year. I think it will be, maybe more than one. It's just a question of how many people and which categories will get it and where. It won't be global. So I think that it may be time to reset expectations and people to change their behavior. And some will say that that's political, and maybe it is in some places, but in general it's not. It's certainly not in China. It's certainly not in Brazil. Yes, there are political aspects to how people have handled it, but the virus itself is apolitical, that's for sure. Meanwhile, you have the debates and the media coverage of John Bolton, of the Supreme Court decisions, of whether Trump thinks that complete decoupling from China remains an option, which it really isn't, because that's a goal. I mean, I've been calling for that for 40 years. The problem is this isn't 40 years ago or 20 years ago when we've had a succession of presidents of both parties, and Trump agrees with me, that have let this go on, and too much globalism. And my common refrain is that a little bit of globalism is fine. Too much globalism is like taking 10 Xanax instead of 1. 1 may relax your anxiety. 10, you might not wake up in the morning. So you have to be careful. But we let it go too long with China, and that leaves us in this situation. Speaking of China, this evening the G7 ministers are issuing comments about Hong Kong's treatment with security, the double standard that they're having, how it should stop cheating and creating new trade barriers. And a lot of this is coming out from Europe, not from America. And I think it's perhaps important because China is talking about a significant increase of funding to stimulate the economy, and they're acknowledging the concern that Europe may be closing its door to China. And that is not at all correlated to any view one way or the other regarding Donald Trump, but rather regarding reality. And that's why there's a degree of bipartisan understanding about China. I've called for it for decades, but Trump and the Democrats may get into a contest here in the campaign of who's going to be tougher on China, and that's a little bit problematic, but it's problematic as it is, and it's sort of interesting to hear other countries in the region describing what China's doing in Hong Kong as a threat to the region and so on. Meanwhile, the other threat to this market that came out after the close is the publishing of the balance sheet data. And with the S&P for some months now closely tracking, except for the crash itself, the Fed's balance sheet for 3 months here anyway, it has served as a factor, whether it's, correlation is not causation, I know, but it has simultaneously rebounded with the stock market. And the latest weekly drop coincides with the period of heightened volatility in the stock market, but it's also quadruple expiration. The shrinkage of the balance sheet comes at a time when the Fed's monthly liquidity injection has been tapered to about 120 billion, which suggests that while the balance sheet is likely to resume growing next week, it will be at a more gradual pace. But that may support my idea that the market is volatile and choppy around this expiration, because you have all these traders that I think got into the 2,800, 2,900 SPX strike, and those options go off the board tomorrow. And I think that that may be a part of the volatility that's here and makes it very hard to divine next week. So I said, even if we go down, you could then come up after we digest that. Maybe you follow through negatively at the beginning of next week, and again, you have an intraday rally, and you find out the significance of the S&P's ability to hold around, not ideally at, but the range. I call it a high-level trading range, right around the 200-day moving average, if you would like to view it that way. So, with that said, you had the industrial average today down 39, the transports down 31, the New York Composite down nearly 14. Breadth was negative by only 300 issues, 1290 to 1600. The VIX finishing down a half a point at 32.94, but having trouble working much lower because traders are so nervous. Contrary opinion says that means the market does not collapse yet. But again, we'll see. That won't work forever, you know. And we've had a really good move since nailing the low in March. The Russell up a half a point today after being slammed the preceding day. The 10-year yield at 0.694. It's a little low for my taste, but it hasn't really plunged, and that becomes sort of a key for it not to. The 30-year is at 1.461. Dollar index up just a hair. Bank stock index basically flat. And Bitcoin down 55 at 93.50. It looks like, you never know, it moves quickly one day or another, but it looks like it's failing that whole effort around 10,000, which is what I thought would happen, ideally, but I certainly don't trade it. NASDAQ up 32, NDX up 29.5. Semiconductor index down 394, oil index up 11, and crude oil today for August up 26 cents. GLD down 0.32, and silver down 12 cents. Among individual stocks we keep an eye on is truly a mix. It was a summer market. That means some were up and some were down. Amgen up 435, Apple up 14 cents, Ameren up 6 cents. Amazon up $13, AMD down 50 cents, Athersys down 7 cents, Boeing down 25 cents, Delta up 7 cents. But, you know, these net changes don't show you the intraday volatility, which was significant in some of these. Disney up 72 cents, not much response. It's opened Hong Kong Disney, but so far there's not been, as far as I know, a big explosion of COVID in Hong Kong again, and we hope it remains that way. Beijing and environs right around it seem to have been hit the worst this time. Disney up 72 cents, FLIR down 136, Gilead up 28 cents, Google down $15, IBM up a penny, Facebook up 41 cents, Intel down 41 cents, JetBlue up 10 cents. LightPath was pretty volatile, but not on heavy volume. Got all the way down to 277, and then it bounced back and closed at 293. Sort of interesting. Every time they hit it with light volume, buyers come in on heavier volume. That was the case as well today. But what it needs to do now is hold this vicinity, and we'll see, above 265, 270 or so, and or then move up above this declining tops pattern. Not the spike. I usually X out spikes when I look at charts. But I'd say 315 to 320. Consolidate and then pop above that, and it can work higher, should that be the case. At the moment, it and other infrared and monitoring stocks are seeing some profit taking, but as this virus is coming back and demand for monitoring and so on, I can't imagine that demand for infrared would be declining. I think it's actually increasing. But we don't know, and the company will tell us when they do their next report. What I think goes on with this little stock, which is very speculative, but I think it's institutional accumulation whenever it pulls back, but I don't think the known funds will come into it unless and until it goes over the $5 area, which would not surprise me at all. Microsoft up 208, Netflix up 210 today, Pluristem up 2 cents, Nvidia down 72 cents, Sorrento up 7 cents, Telephone up 9 cents, Tesla up $12, Texas Instruments down 24 cents, and finally Exxon up 29 cents, which turned around earlier today and helped the averages at least temporarily. S&P futures this evening up 775, S&P cash finished the day up 185. So you've got about a 9 discount to cash, 9 handles in the futures at the moment, which is perfectly normal. Stay tuned for potentially a fairly wild Friday, which will have most likely nothing to do with next week's action except getting that open interest diminished in terms of the SPX. Good night.